Good evening, ladies and gentlemen. On behalf of Capital Trust Research Private Limited, it gives me immense pleasure to welcome you to a research webinar on Budget 2022 highlights and impact on stocks. Capital Trust Securities is ranked number one so far in year 2021 in terms of transaction turnover and brokerage turnover and number of transactions. Capital Trust Securities is also ranked number one so far in the financial year 2021-2022 in terms of transaction turnover, brokerage turnover, and number of transactions. Today's webinar is the 21st webinar of a continuous series of webinars. Due to the out-of-the-box thinking of Capital Trust Research, recommended stocks which will not be affected by the adverse economic situation in Sri Lanka, and even those stocks which have made lesser profit in Sri Lanka have therefore emerged as winners after the budget. Capital Trust Research, through its webinars and research reports, has generated over 300% total return this year alone if bought proportionately to their market caps. We are happy that we have guided our clients to buy and continuously hold on to the shares we recommended and make enormous total returns and kept the Colombo Stock Exchange very active. Now we are pleased to introduce Mr. Hastaliyanage, Head of Research of Capital Trust Research Private Limited, and Mrs. Divya Kasichetty, Head of Corporate Finance of Capital Trust Partners Private Limited, who will make the presentations. You may type any questions you may have in the chat screen, and we will answer questions which are relevant to many investors. Over to you, Divya. Thank you very much.
Thanks, Prashani. As you are aware, the second fiscal budget of the Sri Lanka Podujana Perumuna government was presented by Honorable Basil Rajapaksa on the 12th November for the year 2022. Considering the challenging economic conditions, we believe this budget is a pro-capital market friendly and supportive one. Despite the expectations, there is no significant changes to taxation and policies remain largely consistent and stable. Corporate tax, personal income tax, and VAT, other than for financial services segment, remains the same. Leading up to the budget, there were various paper articles and rumors of an introduction of wealth tax. However, there is no introduction of wealth tax. Then there were rumors of reintroduction of capital gains tax due to the continuity of the share transaction levy in the contract notes. However, there is no capital gains tax for quoted equities and no increase in capital gains tax for properties. Further, there is no reintroduction of withholding tax on interest and dividends and no reintroduction of pay. Let's take a quick look at the prevailing pro-business tax policies. As mentioned previously, there is no withholding tax on interest, dividends, and royalties. Persons generating profit or income from agriculture, livestock, fish farming, IT are exempted from income tax. Income tax concessions are offered to companies that list on the Colombo Stock Exchange before the 31st of December 2021, providing a 50% tax concession for financial year 22 and thereafter a concessionary tax rate of 14% for the next 3 years. Tax rate charged for companies within exports, tourism, education, Medicare, construction, agro-processing remain at 14%, while manufacturing sector companies are taxed at 18%. Trading, banking, finance, and insurance companies are taxed at 24%, with liquor, tobacco, betting, and gaming taxed at 40%. Let's go through the new taxes and key changes proposed in the budget. A one-time tax surcharge of 25% is proposed to be imposed on persons or companies with taxable income over 2 billion rupees for the year of assessment 2020 to 2021. This is a retrospective tax on taxable income already declared, and the government plans on raising 100 billion rupees from this tax. It is our understanding that 62 companies qualify for this, of which we have looked at listed counters in detail to assess the impact of same. We will go into details on the impact on stocks with you later on in this presentation. With the aim to rebuild Sri Lanka's economy affected by the COVID pandemic, a social security contribution has been introduced, which proposes to charge 2.5% of the annual turnover exceeding 120 million rupees. 140 billion rupees is expected as revenue through this tax. This will be charged from year commencing 1st April 2022. Further, VAT on financial services is proposed to be increased from 15% to 18%. This tax has been proposed to be paid monthly from the 1st January 2022 to 31st December 2022. 14 billion rupees is expected to be earned through this tax. Let's have a look at the key changes on excise duty proposed in the budget. Excise on cigarettes is to be increased immediately, which will result in an increase in the price of a cigarette by 5 rupees. Government expects a revenue of 8 billion rupees through this initiative. Further, excise tax on cigarettes, alcohol and beer products has been increased with immediate effect. Implementation of the Special Goods and Services Tax, which was previously proposed in the 2021 budget, for which legal provisions are already drafted, will come into effect from 1st January 2022. This is applicable for companies within the telecommunication, motor vehicles, cigarettes, liquor, betting and gaming sectors. The tax rate applicable is yet to be specified. The government plans on raising 50 billion rupees from this initiative. Let's have a quick look at the key themes of the budget prior to reviewing the revenue and expenditure proposals in detail. The budget emphasized the importance of national security, social welfare, and sustainable development within the broader scope of vistas of prosperity and splendor. The importance of strengthening trading and manufacturing sectors were discussed to promote a production-driven economy. Promoting local manufacturing and targeting import substitution for agriculture, dairy, and apparel sectors were discussed. Social welfare and relief programs will account for a significant percentage of government expenditure, including relief measures for COVID-impacted businesses and support for households, special needs individuals, and the elderly. Support for small and medium enterprises by providing facilities outside of the Western Province and development of entrepreneurial, community facilitating training and assets were proposed. Expenditure management measures, including business focus and financial discipline within the government enterprises, has been proposed with a maximum utilization of government assets. Let's have a look at the incremental contribution from the new tax proposals. An incremental revenue of 341 billion rupees is expected to be generated from these initiatives. Approximately 70% of incremental revenue, amounting to 240 billion rupees, will be from the surcharge tax and the social security contribution, with special GST contributing 15% and excise contributing 10% of the incremental revenue. Let's move on to the government revenue and expenditure projections. Government revenue only accounted for 9.2% of GDP in 2020, owing to the impact of the COVID-19 pandemic. Government revenue is projected to increase by 46% to 2.28 trillion rupees. With the implementation of the new tax proposals that we previously discussed, tax revenue is expected to increase by 50%. When looking at the revenue composition, tax revenue is expected to account for 84.9% of the government's revenue in 2021 and increase further to 87% of revenue in 2022. New goods and services tax and one-off surcharge tax is expected to drive revenue growth. Looking at the pie chart, it is evident that the goods and services tax account for 41.6% of the taxes in 2021 and is expected to further increase to 45.1% in 2022. Income tax contribution is also expected to increase from 18.9% to 21.7% in 2022. Historically, despite the decline in revenue, government expenditure has steadily increased. Looking at the chart, the recurrent expenditure is estimated at 83.2% of total expenditure. This is expected to be rationalized, with expenditure on goods and services to be tightened and expenses on subsidies and transfer payments to be cut by 2%. Although salary bill is expected to grow by 14%. Accordingly, recurrent expenditure is projected to reduce to 76.6% of total expenses. Public expenditure, which is estimated at 17.2% of total expenses in 2021, is expected to increase to 23.8% of total expenses in 2022, given the 60% increase in allocation for public investment. This has been the highest allocation for public investment made in the last 5 years. This is expected to lead to a higher economic output and a widespread economic benefit in the medium term. Considering the growth in government revenue of 46%, coupled with the expense rationalization, the budget deficit is projected to narrow and decrease by 10.8% in 2022. Looking at the graph, the budget deficit as a percentage of GDP has steadily increased from 2016 onwards and was recorded at 11.1% of GDP in 2020. Considering the initiatives discussed, the budget deficit is expected to narrow from the estimated 11.2% in 2021 to 8.8% of GDP in 2022. The government has optimistic and aggressive plans on further reducing the budget deficit to 6.1% in 2024 and 4.8% in 2025, and projects a balanced budget in 2028. In order to reduce the budget deficit, the government has acknowledged the need for solid expenditure management, increasing government revenue, and restructuring loss-making public enterprises. Given the increases in the budget deficit, the debt stock required to finance it has also increased steadily. In 2020, total debt as a percentage of GDP increased to approximately 101%. Given the current economic environment, it is likely that the government will largely rely on domestic sources to fund the deficit. The government has printed over 709 billion rupees year to date. Inflation has been increasing in the recent months, with year-on-year headline inflation as reflected in the Colombo Consumer Price Index increased from 5.7% in September to October 7.6%. Food inflation increased 12.8% year-on-year from 10% in September, while non-food inflation increased from 3.8% in September to 5.4% year-on-year in October. Central Bank expects inflation to remain high at 8 to 9% in the next few months, owing to the upward adjustments of retail market prices of some commodities, owing to supply-side factors and increase in global commodity prices. As per Central Bank, inflation is thereafter expected to gradually come down to desired levels of 4 to 6% in the medium term. However, Capital Trust Research estimates that the actual market rate of inflation will continue to be very much higher. Therefore, we urge investors to avoid investing in fixed deposits which give negative real returns and invest heavily in stocks with large real estate asset bases. Owing to these factors, we also expect the rupee to continue to depreciate against the US dollar. As such, in order to protect yourself, it is best to buy companies with dollarized assets and dollar earnings and benefit from exchange gains, buy companies with real estate as it is a hedge against inflation. Further, foreigners would pay more in rupees with the same amount of dollars, therefore benefit from revaluations and thereby resulting in an increase in net asset value. Borrow now and invest, as you will be repaying the same amount of capital in rupees in a few years with much less purchasing power. The international norm is to focus on balance sheet strength, which is more sustainable, rather than only focusing on profit and loss accounts, which is short-term in nature. In other words, when you increase the profit in the profit and loss account, the company gets taxed more. And finally, those profit after tax is what gets accumulated as the reserves in the balance sheet. Therefore, directly increasing the net asset value in the balance sheet with less profits, mainly through revaluations and exchange gains, is a safer way to create and preserve wealth. Therefore, focus on companies which increase their net asset value in the balance sheet and not only focus on profits in the P&L. Let's take a closer look at the newly introduced one-off surcharge tax of 25%. A one-time tax surcharge of 25% was proposed to be imposed on persons or companies with taxable income of over 2 billion rupees for the year of assessment 2020 to 2021. The budget proposal does not indicate the base on which the surcharge tax is to be imposed. However, having obtained clarification from ministry personnel, it was confirmed that the tax will be charged on the total profit from a base of 0. As the tax is accounted as a retrospective tax, the balance sheet and cash flow statements of financial year 22 will reflect the tax. There will be no impact on the P&L. Therefore, forward PE multiple-based valuations will remain unchanged. To clarify, surcharge taxes will be 25% of the taxable income and not 25% of the tax liability. Tax surcharge is on taxable income, which is only in Sri Lanka. Tax has already been paid for those in the respective countries for foreign sourced income. Therefore, do not get misled by looking at the total amount of tax paid in the P&L. Let's do a comparison of the one-off super gains tax introduced in 2015 and the one-off surcharge tax proposed in Budget 2022. Both taxes are imposed on individuals or companies. Super gains tax was applicable on profits before tax exceeding 2 billion rupees for the assessment year 2013 to 2014, was imposed on individuals or companies, including subsidiaries and holding company in a group of companies earning over 2 billion rupees in profit before tax for financial year 14. While the future surcharge tax is applicable on companies with a taxable income of above 2 billion rupees for assessment year 2020 to 2021. The tax rate applicable across both amount to 25%. For super gain tax, the taxes were to be paid over a period of 3-month installments. The payment method is yet to be notified for the surcharge tax. The graph reflects the ASPI movement. Let's take a look at what happened to the share market post-announcement of the retrospective tax in 2015. On the 29th of January 2015, super gains tax of 25% was proposed in the interim budget. Initially, the market declined by 5.1% over 2 trading days. Thereafter, the ASPI recovered and increased back up by 5.1% over the following 5 trading days. As in the past, while investor sentiment is affected in the immediate short term, we believe that the sentiment will be restored once the news, as mentioned in our first slide, regarding zero capital gains tax, zero wealth tax, no increase in VAT, no increase in corporate tax for over 270 stocks is digested, and the full impact of the proposed tax on select counters is fully understood by the market participants. I will now hand over to Hasita to go through the detailed impact of the taxes applicable on individual stocks.
Thank you, Divya, for the detailed overview. Now let's move on to estimate the approximate impact of the surcharge tax on quoted stocks. In order to estimate the impact on listed companies, we have only considered company-level taxable income figures of listed companies. We should not look at group consolidated figures. There can be certain unlisted subsidiaries of listed companies that might be impacted by the surcharge tax. We have not accounted for the same due to the lack of visibility. As per our understanding, there are 31 listed entities that will be required to pay the surcharge tax of 25% of taxable income. For our calculations, as Divya mentioned, the surcharge tax of 25% will apply on total taxable income. It is not just the excess above 2 billion, as some were wondering. From the LLC group of companies, it is confirmed that only CLC is impacted by the surcharge tax. CLC has a taxable income of 3.2 billion and an applicable surcharge tax of approximately 797 million. LLC Holdings, PLC at a company level, LOFC or bill aren't impacted by the surcharge tax. LOFC is not impacted due to the tax losses from merging with another entity. In FY21, RCL, Lanka Tile at a company level made a taxable income of over 2 billion due to the import ban. RCL's taxable income at a company level amounts to approximately 2.1 billion, while Lanka Tile's taxable income amounts to 2.4 billion. The additional surcharge tax expense to RCL at a company level amounts to approximately 525 million, while Lanka Tile's surcharge tax is estimated at 590 million. LWL, on the other hand, isn't impacted by the proposed surcharge tax at a company level. The other building material stock in our research universe, it is confirmed that ACL isn't impacted by surcharge tax, as the taxable income in FY21 was below 2 billion. Two other building material stocks favored by investors are Alumex and Swiss Texilon. It is confirmed that as their taxable income at a company level is below 2 billion threshold, the surcharge tax doesn't impact them. It is confirmed that Export Lanka's taxable income of its local operation was a negative in financial year 2021. As a result, it's not impacted by the surcharge tax. The taxation figure in the P&L, which you see, includes taxation paid in all countries. It is confirmed that the three Haley's Group subsidiaries, Dip Products, ACAB, and MGT, are not impacted by the surcharge tax, as its taxable income at a company level is below 2 billion. TJL, on the other hand, has a taxable income greater than 2 billion at a company level. The taxable income at a company level includes foreign income, which might be exempted from tax calculation. Company management is currently awaiting for some clarity on the same, and we will provide more info on the impact of surcharge tax in the future. The banking sector is a sector worst hit by the surcharge tax. We estimate the sector will be required to make payments amounting to 18.7 billion. This will impact the bank's capital adequacy ratio as well as its net asset value. The surcharge tax to be paid by the banks are estimated to be as follows. Commercial Bank, rupees 5 billion. HMB, 3.6 billion. Sampat Bank, 2.8 billion. And NDB Bank, 2.1 billion. Okay. In addition to the banks listed previously, the following banks are estimated to incur the following surcharge tax expense. NTB, 2 billion. Ceylon Bank, 1.2 billion. DFCC, 1.1 billion. And PABC, 799 million. Similar to the banking sector, larger tier 1 NBFIs such as the LB Finance, Central Finance, PLC, commercial credit are impacted by the surcharge tax given the high taxable income. The estimated surcharge tax are as follows. LFIN 2.6 billion, CFIN 2.4 billion, PLC 2 billion, and COCR 1.4 billion. The other two NBFIs that are estimated to be impacted by the surcharge tax are CDB and Valuable Finance. Both are estimated to incur an expense of 1.2 billion and 880 million respectively. The four large conglomerates, JKH, Melsaco, Richard Pierce, and Valuable One, are estimated to be impacted by the surcharge tax, as the taxable income at a company level is above 2 billion. We have not accounted for surcharge tax to be paid by any of its unlisted subsidiaries due to the lack of visibility on the relevant taxable income. The surcharge tax payments estimated for JKH, Melsta, Richard Pierce, and Valuable One are 1.5 billion, 1.7 billion, 533 million, and 510 million respectively. Other conglomerates such as Hema and Cargill reported taxable incomes of less than 2 billion in FY21 at a company level. Due to the lack of visibility of the taxable incomes of its unlisted subsidiaries, we have assumed that they aren't exposed to a surcharge tax payment. The food and beverage, alcohol and tobacco sector is estimated to incur a surcharge tax expense of 11.7 billion across CTC, distilleries, Lion, and Nestle. CTC is the listed company that has to pay the highest surcharge tax, amounting to 6.3 billion. Due to the strain on its cash position, we might witness the dividend yields to reduce on a year-on-year basis in calendar year 2021 due to the surcharge tax. Saying that, there's a possibility that management maintains its strong dividend payout ratios by leveraging off its strong balance sheet. Distilleries is estimated to incur a surcharge tax of 3.1 billion, while Lion is estimated to incur a surcharge tax of 1.2 billion. Nestle is estimated to incur surcharge tax of 1.1 billion. Similar to CTC, we can expect the dividend yields on Nestle to reduce. Whenever the government attempts to increase tax collections from the private sector, it targets the financial services sector, alcohol and tobacco sectors, and finally the telecom sector. Dialog and SLT are each estimated to incur a surcharge tax of 2.9 billion and 869 million respectively. The four other companies estimated to incur the surcharge tax are as follows. Singer Sri Lanka 897 million, Lanka Lubricants 780 million, Access Engineering 613 million, and SoftLogic Life Insurance 582 million. This graph sorts the surcharge tax payable by listed companies from the lowest being Valuable One to the largest being CTC. The total tax contribution from 31 listed companies is estimated to be approximately 53.5 billion rupees. As you can see, the banking sector is the sector affected the most by the surcharge tax. The sector is estimated to incur additional tax expense of LKR 18.7 billion. The food, beverage, alcohol, and tobacco sector is expected to incur an additional tax expense of 13.4 billion. The MBFI sector is estimated to incur an additional tax expense of 11.3 billion. The telecommunication sector is estimated to incur additional tax expense of 3.7 billion. As mentioned before, the banking sector was the most affected by the budget. The effective corporate income tax is estimated at approximately 49%, inclusive of the 25% surcharge tax. VAT on financial services was proposed at 18% from the current 15%. The sector will also incur an additional social security contribution on turnover amounting to 2.5%. This additional fee will most likely be passed on to customers in the form of a new fee or an increase in existing fees. Similar to the banking sector, the MBFI sector is impacted in a similar manner. The additional surcharge tax is expected to increase the effective tax rates for the larger tier 1 MBFIs, while profitability will be also hampered across all MBFIs with the higher VAT expense. The tile sector will continue to sustain elevated profitability due to the import ban continuing. The cash flow and dividend payout ratios for financial year 2022 will be negatively impacted by the 590 million surcharge estimated for Lanka Tile and 525 million estimated for RCL. Given the tile sector counters performed well above expectations in the second quarter financial year 2022, they are trading at low and attractive valuations. We don't expect a rating downgrade on the counters as the forecasted profit increase in the second half of financial year 22 is expected to offset the impact of the surcharge tax. Given that the RCL group controls 75% of the market share, market share, and the market makers in terms of pricing, with over 3 months waiting period for customers to obtain tiles, we expect the companies to pass on the 2.5% turnover tax to customers. The government has called for expression of interest to develop over 2,000 megawatts of wind and solar plants to be connected to the national grid within the next 3 years. This policy will enable large renewable energy independent power producers to increase their portfolio pipeline and profitability in the future. With the addition of over 2,000 megawatts of new projects, we expect a surge in demand for electrical cabling from the plant developers as well as from the CEB for setting up new transmission lines. ACL is expected to benefit through the increase in cable sales as well as through the increased profits from its associate company, Resource Energy. Given ACL and Callan Cables control 75% of the market and are market makers in terms of pricing, we expect ACL, Callan Cables, and ACL Plastics to pass on the 2.5% turnover tax to customers. The government has maintained its focus on promoting local manufacturing. In addition, the government has expressed interest in setting up investment zones to promote the production sector with emphasis on rubber, gems and jewelry, and textiles and apparel sectors. The government is also expected to issue a special finance bill to ensure the safety of transactions of foreign current accounts and to simplify the conditions imposed by the central bank on exports with regards to foreign currency conversions and transfers. During the budget, it was proposed to set up various investment zones for raw material manufacturing, for textile and the apparel sector to reduce import reliance of the local apparel sector. Both MGT and TJL are exposed to the social security contribution charged at 2.5% of annual turnover. As the social security contribution only comes in effect on the 1st of April, MGT and TJL have the ability to pass on the increase in taxes owing to its niche customer base and scheduled price revisions in April 2022. Government expressed interest to address issues faced by stakeholders of the dairy industry and facilitate the expansion of the supply of liquid milk to promote the production economy. In addition, there will be incentives provided to increase milk production and enhance the consumption of fresh milk to a lower milk powder imports. New laws will be passed on the usage of lands owned by public and privately owned plantation companies to ensure the maximum utilization of buildings and other assets. In addition, a budget of LKR 10 billion will be allocated to the plantation industry to promote the following: build a value-added plantation crop industry which is equipped with modern technology to encourage private sector investment to tackle the export market, to ensure water supply to guarantee productivity of crops. The telecommunication sector was negatively impacted by 3 new taxes proposed. The surcharge tax is estimated to result in a 3.7 billion cash outflow. In addition, a new GST tax is expected to be introduced by 1st of January 2022, but the percentage applicable was not disclosed. An additional 2.5% turnover tax will be applicable as a social security contribution as well. Both the turnover taxes will most likely be passed on to customers and not cause an adverse impact on profitability and demand. The development of a range of irrigation projects and rehabilitation of smaller scale tanks is expected to positively impact central industries. In addition, construction companies such as AEL and Brown's Engineering are expected to be positively impacted by the National Road Development Initiative, where 25,000 kilometers of roads per year will be constructed starting from 2022. There were multiple incentives given to the pharma and healthcare sectors to promote new investments. There were proposals to provide lands and tax concessions to encourage investors to establish a hospital in every district. Investment zones for pharmaceutical production have been identified in multiple locations to promote investment and facilitate import substitution, as well as promote exports of pharmaceutical products. The pharmaceutical sector will be negatively impacted by the social security contribution, as the companies will not be able to pass on the price increases due to price controls. Similar to the telecom and financial sectors, the tobacco and alcohol sectors were hit hard by the various taxes proposed in the budget. The changes proposed are as follows. Tax on cigarettes increased by 5 rupees per stick. Excise tax on locally produced alcohol and foreign liquor increased with immediate effect. In addition to the above, the following 3 taxes will also apply to the sector. GST to be imposed from 1st of January 2022. Social security contribution charged at 2.5%. These 2 turnover taxes is expected to be passed on to the customers, similar to the other companies we discussed earlier, thus not have a negative impact. That covers our budget review. And now over to you, Prashant.
Thank you very much, Hasita. Before proceeding to the Q&A session, may I kindly request Divya to take 3 minutes to introduce Capital Trust Partners Private Limited, please.
Thank you, Prashani. Capital Trust Partners Private Limited is a fully fledged investment banking and corporate finance advisory firm. You may be an entrepreneur who started a business around a good idea. A successful strategic formula has created shareholder value, and now your company is ready for the next step. We will assist you with this process and prepare your company to go public by providing pre-IPO advisory services. Thereafter, we will manage the entire end-to-end listing process. We are confident in our ability to successfully close out the IPO by leveraging off Capital Trust Securities' large network of clients. In addition, we also have the expertise to manage both listed and private debenture issuances to assist you in raising the necessary debt capital to grow your business. Further to our investment banking solutions, we also carry out strategic consulting, sector and company research, valuations, restructuring, corporate financing, and other investment banking services that will provide our clients with the necessary insight to make informed decisions. We conduct sector analysis, feasibilities, project reports, business plans, and also financial and operational restructuring, financial modeling, data gathering, and analytics. Our team consists of individuals who have extensive experience in executing investment banking transactions and advisory services in Sri Lanka and overseas. Our team consists of individuals who have extensive experience in executing investment banking transactions and advisory services in Sri Lanka and overseas. Please get in touch via email or call us for any further details. Thank you. Over to you, Prashant.
We thank you, Hasita Diva and the staff of Capital Trust Research for your valuable insight on the budget highlights and impact on stocks. Capital Trust partners have a close working relationship with BDO. Therefore, we are pleased to have Mrs. Dinusha Rajapaksa, Director, Tax Advisory Services of BDO, also with us today to answer any technical questions on the budget. Please welcome Mrs. Dinusha Rajapaksa. Can Mrs. Sandesh Jayakodi, Deputy General Manager of Capital Trust Securities, read out some of the questions that are relevant to many clients, which have been sent to the chat by the audience, please?
Thank you, Prashani. Thank you, Hasita and Divya, for that comprehensive update on the budget and the impact that it has on the listed stocks. And thank you, ladies and gentlemen, for joining us this evening. I know it's not the ideal day to have a webinar, but we felt it was important that we updated you all about the possible impact, especially with regard to the market, and so that you all can make informed decisions before you start trading tomorrow. So hence the reason for this presentation on a Sunday evening. So thank you once again for joining us. There's a question about the 25% surcharge tax, which I think everybody has been talking about. Is this tax applicable from payable tax or from the revenue?
It's on the taxable income. So essentially, profit before tax after the necessary adjustments is generally what is considered taxable income. So it's payable on that base. So it's from zero essentially.
Yeah, so Divya mentioned it. So you need to account for last year's taxable income, or take last year's taxable income and then apply 25% of that if the taxable income is above 2 billion rupees. So I think company like 12-1, for example, their taxable income was, I think, 2,039 million or something along those lines. And for an additional 39 million, they will have to incur additional tax of around 500 million rupees. Our calculation.
Yeah, when it comes to dividend payments, do you see the dividend yields of certain companies reducing with the increase in this tax?
Yeah, so this tax payment will obviously have an impact on the cash flow, financial year 2022 cash flows of various companies. So yes, there can be an impact on dividend payments. So as we mentioned, companies like Nestle and CTC, because they usually pay a significant portion of their earnings as dividends, big chunk as 6.3 million going out from CTC, it might have an impact on dividend payout ratios. But saying that, similar to what happened in 2015, they might continue the same dividend payout ratio, but leverage of its strong balance sheet and increased short-term borrowings, which will be paid in the future years. So depending on the parents' requirements, they will decide most likely.
Right. There is a question from one Tulsi Manoharan, and the question is, the banking sector is negatively impacted with this budget. how do you see the share prices react to this impact? Will there be a drastic reduction in the share prices, the banking sector counters?
So we don't think that, okay, first of all, obviously it'll affect the sentiment of various shares because I don't think this sort of tax was priced in to Friday's closing price, for example. But saying that the shares are already trading at significant discounts on net asset value. So we don't see a significant reduction in the share price, but in the short term, there might be a reduction in the bounce in a few days when the market factors in future profitability, etc.
So with regard to the banking sector, Sandesh, they have been actually severely impacted from this because if you look at, okay, from a VAT perspective, VAT increases from 15 to 18%. Then even their effective tax rate also has in turn also gone up. So if you look at the sector as a whole, I think you're looking at about just from the surcharge impact is around 18.7 billion rupees. So like banks such as Commercial Bank on the surcharge is impacted by about 5 billion rupees, HNB 3.6 billion rupees, Sampat 2.8 billion and so on. So yes, the sector will get impacted. So we just need to keep that in mind.
Yeah. And also an important note is these taxes will most likely flow out of the reserves. So the net asset values of these banks will reduce. So those valuations need to be adjusted accordingly. So there might be a reduction, but at the same time, we need to adjust fair valuations going forward as well, accounting for various other changes in the operating environment.
There is a question on the tile sector by Mr. Chatura Karunaratna. He's asking, in the tile sector, you mentioned that LWL will not be impacted by this 25% tax. However, since it owns 78% of tile, wouldn't it indirectly impact LWL? Is his question.
Yes, indirectly, at a group level, there will be an impact. What we are referring to was at the company level impact on tax. But if you look at the group cash flows and NAVs, obviously LW will be affected as well. But we can get some additional clarity on these tax implications from video partners as well, I think, who are available. Yeah.
Yes, just to add on to the 25% surcharge tax, yes, from what has been proposed, it will be only applicable at a company level and not at a group level. So therefore, you're absolutely right. It depends on each company's profitability and whatever subsidiaries that are not visible at a holding company level, even though we will not be able to compute the impact. Yes, it will have an indirect impact as well. And also to add on to your point about the banking sector and the VAT increase on the banking sector, interestingly, the proposals say that this additional 3% cannot be passed on to the customers. So when you say it will have an impact on its reserves, that is definitely going to be something that will eat into the margins of the banking sector, and it will have impact on their profitabilities, because unlike VAT on normal goods and services, which is charged on to the customers and the final end consumer bears the VAT, this particular increase has been specifically mentioned that it cannot be passed on to the customers. So it will definitely have an impact on the profitability of the banking sector.
So there is a question from Mr. Arula Palam. The question is, what is the impact on Haley's due to this 25% surcharge tax? I think it was not there in your slides. So does that mean that they are not impacted by this?
In our slide, what we stated was out of all the Haley's companies, it's only Singer. Sri Lanka that's impacted by the surcharge. And I think it was around 800 million or 890 million, if I'm not mistaken, was the surcharge tax applicable on Singer. And as per our estimates, none of the other group companies, as well as Haley's the whole co, are impacted by the surcharge tax, as the taxable income for each subsidiary and at a company level is below the 2 billion threshold.
When it comes to group companies like John Keel's and Valuable One, now you all have stated that these companies are also liable for this 25% surcharge tax. So some of these companies may have received dividend incomes and may have already paid taxes on that. So will they be charged twice? Could you clarify on that?
Yes, so as per our understanding, dividend income is part of your taxable income. So even though they have paid a 14% tax on that dividend income, now an additional 25% tax will be applicable if the total taxable income is above 2 billion. And for John Keel's, Mesacorp, Valuable One, Richard Pearis, for example, they have considerable amount of dividend income flowing through as well as interest income coming in that will be charged at this 25%.
And just to pitch in there, just to make it simpler to understand, we assuming that now in the previous slide, you saw that there are different tax rates for different industries. But for simplicity, if we assume that the company only a 24% tax is applicable, and it's just in a sector where the 24% tax is applicable, then you have already paid 24% of your taxable income due 30th September 2021. So on top of that, you would have to pay 25% again on that same taxable income. So ultimately, it's 49% of your taxable income that will have to be paid. But I mean, that's just the theory. So different companies have different tax rates applicable. So for dividend, if they had dividend income, it will be at 14%. Concessionary rates like industries like exports and exports, education, all that have concessionary rates. So there's no one tax rate applicable on a taxable income. But then this 25% will just apply flat on the taxable income itself.
When it comes to GST, there's a question, is this a new tax or is it something that they are consolidating, which is already there, especially when it comes to like the telecommunication sector? And could you give us some clarity on that about GST?
Do you want to take that? Or?
Yeah, sure. So GST, what happened was in the 2021 budget speech, that was last year's budget speech, they mentioned that there is going to be this goods and services tax that's going to be introduced for these 5 particular industries. However, even in the 2021 budget speech, they never indicated the tax rate at which this was going to be introduced. So what the 2022 budget, that is the one that was read last Friday, has done is that they have just said that we are going to implement the proposal that was given last year. So we don't know currently what the rate is, but from what how it has been read, it will be a new tax that is applicable for these industries. And the previous year's budget speech said that it was the purpose of introducing it would be to consolidate certain taxes. So most likely certain taxes might be removed and then this GST will come as a composite tax. So that was what was explained in the last budget.
Mr. Tarindu Amarasinghe has asked, how would the surcharge tax impact the NAV of these companies? Would there be an impact on the NAV of these listed companies because of the surcharge tax?
Dinisha, do you want to take that or shall we?
Yeah, so NAV will be impacted, say 25% will have to be paid out by the company, which will be expense that you will have to, the company will have to bear from its cash reserves or cash assets. So definitely cash outflow of the tax would have an impact on the, will decrease their assets, and it will have an impact on their NAV.
Dinisha, just on that, with regards to this payment, the retrospective tax payment, so will last year's numbers be restated with a higher taxable tax payment, or how does that?
I think even for super gain tax, the Institute of Chartered Accountants came up with a guideline as to how the accounting should be done, because it was a retrospective tax and then the accounting standards had to be taken into account. So we will have to wait for the chartered accountants to kind of give us a guidance as to how we should account for it. But based on the super gain tax, it will be adjusted, not restate but adjusted. If it's the same that they are going to same approach they're going to adopt for this as well.
Mr. Suranga Fernando has asked about how it will affect the banking sector margins. What sort of impact do you foresee?
So as Dinusha mentioned before, if the increase in VAT cannot be passed on to the customers, then there will be an erosion of profitability of that 3% as well. And then even the social contribution 2.5% as well. We'll let to see exactly whether that will be passed on in some sort of form or whether that will erode their margins further.
There's another question about the, it's also to do with the banking sector. The question is from Mr. Crispy Alves. He's asking if the bank will have issue with reserve adequacy, whether we will see consolidation being pushed for by the regulators.
I think most of the banks actually are fairly well capitalized, the larger banks at least at the moment. So I don't think there would be issues in terms of sort of the minimum capital requirement and all for the larger banks. But industry consolidation is something that has been actively pushed by the regulator to further strengthen the industry, even in the recent past as well.
There's a question about the surcharge tax, whether it's applicable only for year 2021 or whether it will be applicable for the current financial year as well.
According to the budget proposals, it's a one-time tax. They have named it also a one-time tax. So it should be only for the year of assessment 2021, that is a financial year ending 31st March 2021.
There's a question, Sita and Divya, maybe one of you can answer the impact on Tokyo Cement and HECAP, whether what's the impact from the budget on these two companies?
So Tokyo as well as HECAP, there's no impact on the surcharge tax because their taxable income is less than 2 billion, both companies. With regards to the 2.5% turnover tax, it obviously depends on a few factors. HECAP being an exporter, we need to find out how price competitive they are. Certain niche products, obviously, they can pass on the price increase. But for various commoditized products, there might be a challenge to pass on the additional 2.5%. But again, we need some clarity on that. So with regards to Tokyo Cement, again, it depends on what the market in general does, because at the moment there are two similar sized players, Tokyo and INSEE, for example. So depending on the collective decision, depending on the decisions both companies make, we'll have to evaluate it. If one company decides against it, then obviously the other company cannot. So that's the issue when there are two similar sized players, rather than being a larger market leader that is a price maker. So we'll have to wait and see as to what decision the two companies take, and see whether the 2.5% price increase will be passed on.
And any thoughts about HACAB and any possible impact or anything positive
So
on it?
HACAB again, we'll have to wait and see, as I said before. But at present, even if you look at the last quarterlies that were published last week, their margins have been impacted with the increase in raw material prices as well as the freight costs. And last year, the margins were exceptional because in the first half of the year, gold prices really shot up, and that really boosted their margins. But this year, there is no such impact. So margins are down on a year-on-year basis. So we don't see a catalyst as such where the earnings will grow going forward in the near future at least.
Again, I think you may have answered this, but the question is with regard to valuable one, since RCL is also liable to pay this surcharge tax. Mr. Taranga Pialal is asking, why would it be like now? Why would two companies be liable for the same thing in that scenario?
I think Dinusha clarified this earlier. So the surcharge tax is applicable at company level and not necessarily at group level. So that if a company's taxable income is greater than 2 billion rupees for the year of assessment 2021, is where this 25% surcharge comes into play.
I think we have covered most of the questions that have come our way. So, yeah, I think we can wind up this Q&A session.
Thank you very much, Hasita Divya, Sandesh, and Mrs. Divya Rajapaksa for your valuable insight on the budget highlight and impact on stocks. Since there are no further questions, I would now like to close the webinar. On behalf of Capital Trust Research Private Limited, once again, I would like to extend a sincere thank you for our staff who helped to organize this webinar, and for our valued clients for your support and continuous trust in us. Thank you very much. Have a nice day.